Imagine waking up tomorrow, opening your trading app, and seeing a sea of red. The stock market has just crashed 30%. For the average person, this is a nightmare, a destruction of years of hard work. But for the world's wealthiest investors, this isn't a disaster. It's the moment they've been waiting for. It's the moment that creates millionaires. Today, we're going to show you how to be on the winning side of that chaos. The stock market lately has been acting like a hyperactive squirrel, unpredictable, twitchy, and reacting to every small sound. One day, markets jump 4% on news of a trade deal. The next, a new AI tool drops or a single tweet is posted, and suddenly, tech stocks are falling faster than a phone slipping out of your pocket. This volatility is the new normal, but it's also the greatest wealth-building engine ever invented, if you know how to drive it. Every headline you read is trying to sell you fear. They scream about the 2026 recession, the next Great Depression, or the total economic collapse. Analysts and experts fill the airwaves with predictions of doom. But here's the truth. Predictions are basically educated guesses. Sometimes they're right, but they're often hilariously wrong. Predictions are easy, preparation is hard. Instead of following the guesses of analysts who have no skin in your game, you need to ask a much smarter question. What will you do when the crash actually arrives? Because when markets crash, two types of people appear. The first group panics. They watch the red candles, imagine their future vanishing, and they sell everything at the worst possible time. The second group, they quietly become much richer. Same crash, same market, completely different outcome. Mistake number one is the most common: panic selling. When the market drops, everyone suddenly becomes a financial philosopher. They say, "I'll just protect what I have left," or "I'll buy back lower." But two red candles later, they sell everything and lock in those losses forever. If you're investing in stocks or mutual funds, that money should be for the next 3 to 5 years. If you might need it next month for emergencies, the stock market is not the place for it. Selling during volatility is like building a 30-floor building and demolishing the whole thing just because it rained during the construction of the 5th floor. The rain is a temporary storm, but the demolition is a permanent mistake. Your investment portfolio is that building. Don't let a temporary market dip destroy a decade of growth. Patience isn't just a virtue. In finance, it's a mathematical necessity. Mistake number two, using leverage. Borrowing money to invest or trade. Leverage works great when the sun is shining, but during a crash, it becomes a guillotine. It forces you to sell when you should be buying because you can't cover the margin. Experienced investors treat leverage like hot chili. Use a tiny amount carefully, or better yet, avoid it completely. In a crash, leverage is the fastest way to turn a temporary dip into a total wipeout. Mistake number three is spending all your money too early. You hear the news, you see the first 5% drop, and you go all in. Then the market falls another 20%. Now, you're stuck. You have the best opportunity in a decade right in front of you, but you have no cash left to buy the discount. Smart investors don't invest emotionally. They use structured capital deployment. They ensure they always have dry powder for the true bottom. Step one, keep crash capital. When markets crash, cash becomes power. But keeping money idle in a savings account is a trap because inflation slowly eats it like a termite. Park your crash capital in stable instruments like fixed deposits or short-term bonds. This keeps your money growing slowly, but keeps it available for when blood is in the streets. Most wealthy investors keep 10 to 15% of their portfolio ready as a financial first aid kit. Step two, never stop your SIP. This is where the average person fails. They stop investing when things get scary and only restart when the market is back at record highs. That means they buy high and skip the lows. Look at the math. An extra 5% return from buying the crashes can be the difference between 6 crore and 17 crore over 30 years. Same investment, huge difference. Every crash is just a massive discount sale on the world's best companies. Step 3, research before the crash. If you start researching during the chaos, you'll feel like someone chasing chickens in a farm. Confusing, chaotic, and overwhelming. Smart investors create a watch list and decide target prices in advance. When the crash comes, they don't think. They simply execute. They know exactly what they want to buy and at what price. Success is where preparation meets opportunity. Step 4, using volatility. Experienced investors don't just survive volatility, they use it. Some hedge their portfolios using futures and options, while others sell cash-secured puts to generate income while waiting for their target price. These strategies require experience, but they highlight the mindset. Volatility isn't something to fear, it's a tool. For most, the simplest strategy is still the best. When the market crashes, start investing. Let's look at history. Even after the Great Depression of 1929, the market eventually recovered and reached new heights. Those who held on and continued to invest in the strongest companies built generational wealth. History shows us that every major crash, from 1929 to the Black Monday of 1987, was followed by an even more powerful recovery. The market always finds its way back to growth, rewarding those who didn't blink. In 2008, the world thought the financial system was over. Banks collapsed and panic reached a fever pitch. But look at the S&P 500 in the decade that followed. It was the start of one of the longest bull markets in history. Investors who stayed the course during the dark days of 2008 saw their portfolios grow by hundreds of percent. The lesson is clear. The darker the crash, the brighter the subsequent recovery for the prepared. The 2020 pandemic crash was another perfect example. The world stopped and markets plummeted in record time. But the recovery was just as fast. Those who prepared and had cash ready in March 2020 made life-changing returns in just 18 months. Chaos is the birthplace of wealth. Every decade provides at least one or two of these rare wealth-building events. Your job isn't to predict when they happen, but to be ready when they do. Wealth building is 10% math and 90% psychology. Your biggest enemy isn't the market, it's your own biology. We are wired to run from danger, which in the stock market means selling when prices are low. To become wealthy, you must overwrite that instinct. You must train yourself to see red not as a warning of danger, but as a signal of opportunity. Millionaires are made in the bear markets. They just collect their checks in the bull markets. Think long term. Compounding is a miracle that requires time. Every time you panic sell, you reset your compounding clock to zero. You destroy years of momentum. Instead, think of your investments as a tree you're growing for your future self. You wouldn't cut down a tree because of a week of bad weather. You wait for the sun to return. The stock market is a machine for transferring wealth from the impatient to the patient. Choose which side you're on. To recap, avoid the fatal mistakes of panic selling, excessive leverage, and early capital deployment. Instead, follow the roadmap. Keep your crash capital ready, never stop your SIP, do your research before the storm hits, and learn to use volatility to your advantage. These aren't just tips, they are the fundamental laws of survival in the financial jungle. If you follow them, the next market crash won't be your nightmare. It will be your biggest opportunity. If you're ready to upgrade your financial IQ and join a community of investors who see opportunity where others see fear, join us. Comment "upgrade" below to track your commitment to this journey. We're building a high IQ community focused on long-term prosperity and strategic growth. Don't just watch the market, master it. Your future self will thank you for the decisions you make today. Let's build wealth together. Market crashes are scary, but they are rare. If you prepare, you win. The market rewards one thing above all: patience. Are you ready for the next one? Because your biggest opportunity is coming. Patience is your ultimate superpower. Let's make it happen. See you at the top.